get ready because in this video, I am going to teach you how to sell puts to finance a Leaps call option. In this case, it's a Google Leaps that will more than likely a year from now be worth well over $10,000, and I effectively got it for free. Hello, everybody, and welcome to the Trading with Ashley show. I hope you have all had a fruitful day of trading. You know, the market has traded sideways today, which has been really good for a lot of our members who are learning how to trade 0 day to expiration options on the SPY. And we have had some wonderful experiences and some incredible returns with some of our 0 DTE trading. Now, most of you know me for selling options, and that is the bulk of what I do. But it would not be fair to not mention to all of you that are on the outside what we are doing on the inside, and that is we are learning a variety of ways to trade in this market, and people are making life-changing money. I'm very excited to hear that. Speaking about being on the inside, a few videos ago I had asked those of you that have made money from my trades on YouTube, the public trades, to comment, and it was heartwarming to see all of the different opportunities that you have had from watching my videos and the money that you have been able to make, but more importantly, the education, how you have been able to learn how to do this, and it has given you confidence. So I want to ask all of my current Trading with Ashley Inner Circle members, those of you that are on the inside and you see my trades and my support and that of our coaches daily, would you please comment below? I want everyone to understand what the possibilities are on the inside if you have the opportunity to trade with us. All right, with that being said, let's get into a trade that I actually did with my community a little bit over a month ago, and it is really profiting for them right now, and I wanted to explain it to you so that you could mimic it when the time is right. Now, the trade that I am going to show you, the setup is important that you have the right entry. It's called a synthetic long, and the best part about this particular trade that we did, it's on Google, and Google was at the bottom of its Bollinger Band. It was oversold. It is a profitable company, and I know that, and I know that there is a lot of wonderful things on the horizon for Google. So what we did within the community, we went ahead and bought a Leaps call option on Google, but we financed it by selling puts on Google, and we used the same exact date. That's the synthetic long dynamic. And effectively what happened was we were able to sell 2 puts, and it financed the 1 Leaps that we bought, and it had a little bit of extra money in there, so we got a tip for doing this trade. So when it's all said and done, if Google continues to rise, when it gets towards the end of this trade, we would have effectively received the leads for free because we financed it with selling puts. Now, if you're selling puts with cash, you are tying up quite a bit of money, so you wouldn't want to do this if you're locking up your entire trading account. But if you're using margin and you're not being too aggressive, then it uses very little cash. And so we are able to continue to trade with our accounts and just allow the sold puts to continue to mature and make money for us each time that Google goes up or as each day passes. So I'm going to show you the exact trades, and the reason I want to show these to you is I am all about not just calling great plays, but like I said, education. And it's important that you fully understand how to do these things, so when the stock that you're ready to trade next is at that perfect timing, you know exactly what to do. Now, before I get into the details of the trade, I want to make sure if you're listening to this and you're unsure of what I am talking about when I say selling puts, I want to explain what that is. When you sell a put, you are putting up the money to buy a stock at the strike price that you agreed to buy it at. And if by your expiration date, it is not at your strike price, you get to keep 100% of the premium that you received, and then the funds are released to you for additional trades. Now, if it does breach your strike price and you're at the expiration date, Well, then you will be put the shares, so that money that was being held for the trade, it will actually purchase the shares for you. And if you chose the right strike price, you don't need to be afraid of that. That's actually when I make most of my money, when I'm actually put the shares. It's a fun, happy day when that happens if you chose the right strike price on a quality company. Okay, with that being said, we're going into the computer and I'm going to show you this trade. Here is the initial trade that I called out to my members on May the 7th. I love teaching trade hacks, especially when a quality stock is at a great level of support. So let me show you what it looked like on May the 7th and why it got my attention. Now, this is Google on Yahoo Finance, and I have all of my technical analysis populated. But if you look right here, you'll see on May the 7th, this is when we had such a large sell-off, and I knew that it was oversold. You could just tell from the action that was taking place that day. And on the RSI, we were low as well. We were close to being oversold, but not quite there. But because it's Google, I wanted to go ahead and take a position. So this is what I saw, and this is what got my attention. And then we went ahead and alerted it in the community. Another thing that stood out to me is that we were trading below the 200-day moving average. And now that this is starting to gain some steam, we are above the 200-day moving average. If you can see right here, we're above it, and now it should serve as support, which would allow this trade to continue to profit. Now, just in case, we did put a stop loss on the trade, and now we will move the stop loss up so that we will be a little bit more protected, and we can for sure lock in gains if Google pulls back too much. Here are the two positions that I called out. So let's first look at the call. This is December 18th of 2026. On that particular day, this call cost me $3,228. Now, I did use cash for this trade versus margin because when I am purchasing leaps, I don't want to pay interest. So I like using my cash available for the trade. But then if you look right here, I am going to show you the puts that I sold. It was the exact same strike price, but I decided to sell two of these because that would give me that little extra money and it would pay for these leaps. And so by selling two, I received in premium $3,744. Now, I did use margin when I sold these, and that was great because that increased my buying power. In fact, these trades are still being held with margin, but because it's just a sold put and it's not the leaps, I'm not paying interest on that margin. And so this is the way to do it if you want to enjoy all of the movement up without having to pay the interest of margin. So the sold puts already profited almost 40%, and we're just looking at 1 month ago. And the best part, we have such a long way to go to continue to profit out of both of these trades. So we have 557 days till expiration. And then let's go see on an option calculator what this might be worth as we get closer to the expiration date. So that we can anchor ourselves to potential price action, let's take a look at what the highest level we have seen on Google since inception. So look right here, 206. So if we get back up to around 205, 206, that's the price action we're going to look for just so we can see the possibility. Here's our trade on an option calculator. So let's check everything. It's Google. It's 145 call. At the time, we paid $3,228. So if we get back up to all-time highs, let's say we get back up there in maybe October. So if that's the case, we will profit $4,000 on that trade. And if Google continues to rise with AI and everything it has going on, there's so much more opportunity. So what if we get up to close to around 300 by our expiration date? Now, our expiration date is not until December of 2026. So if we're up close to around 300, then we will be around $12,000 in profit. And the best part about this is it was 100% financed by those sold puts. So by that time, we would have definitely been able to get out of those trades and the majority of our profit would be realized. And then that means that this $12,000 that we're enjoying, we effectively got it for free. So this is how you trade. But again, you can't do it every time. You have to find the right setups. If you want support on what the right setups are, then consider joining my community so I can let you in on these when they happen. I hope that opens your eyes to a new way to trade. It's so much fun when you have support, you know what you're doing, and you can trade in a variety of environments. If you want to be on the inside with all of our members that are having so much fun and a lot of success, then please click the link below. We're going to book a brief call with you and interview you. Make sure you fully understand what the Discord is all about, what the community is all about, and we're going to make sure it's a fit. If it is, I will see you this week in Ashley Live when we have more conversations about all these different opportunities in front of us. Remember, if you're with me trading with Ashley, there is no trader left behind. See you on the inside.